Okay. Fantastic. Okay. Madeline, I can't see myself on the screen, but I'm assuming I'm there. I think there's something wrong with my
You're there.
Yes, you are.
Side-by-side mode. Okay, fantastic. Now there I go. I see myself now. Okay, good morning, everybody. Welcome to the Daily Energy Markets podcast. Ramadan Kareem to everybody who is celebrating the holy month. I'm delighted to be joined this morning by Ali Riyami, consultant and former Director General of Marketing at the Ministry of Energy and Minerals, Oman, Yasar Al-Malki, Gulf Analyst at MEES, and Daniel Richards, MENA Economist at Emirates NBD here in Dubai. Gentlemen, thanks so much for joining us here. We are hitting mid-March, almost at the end of the first quarter. Ali, let me go to you first and get your thoughts. We haven't talked to you since OPEC reaffirmed their decision to extend at least the voluntary cuts through to June. Give us your assessment of whether you think that's enough or that's really all they can do right now, and what the likelihood is of what they would do after June, more importantly.
If the question's to me, Diala, so can you please repeat it again, because I missed out the question.
Yes, it is to you. And I was asking you about OPEC's likely next action. They 2 weeks ago reaffirmed that they're going to be extending these extra cuts through to June, which didn't surprise the market, but it's continuing to support the market by the looks of it. And do you think that is why did they do that? And do you think it's likely they will extend through the year, as a lot of analysts are expecting they might have to do?
Yeah. Actually, I mean, like you said, I mean, everybody was expecting this decision of rollover to continue until June, because of the fundamentals. They were not really supporting delaying the decision or to change otherwise. So we were all of us expecting that, and I think the decision was the correct one. If there was any changes on that, then we could have easily see some differences in prices, or maybe the price could be different ones than what we see now. Although that the competition is still there between suppliers in the same market, and also there is a lot of oil we see coming from the United States and also from other producers. They have increased their production. So all of this kind of news and also reality, it really pushed the OPEC and OPEC Plus cuts to continue, and the decision was the obvious decision they have. The question is now, coming June, what are we going to expect to see? My opinion, I think this will continue to the end of this year at least, if it's not going to go longer than that. It depends about the fundamentals, and it depends about the situation in the region here, especially in Gaza and also in Red Sea. But the overall situation in terms of demand and supply, I think we see, according to statistics, that it's a tight market, which I think it is not necessarily very tight, but there is a demand. There is also a problem of China growth, and also the world economy. We are still suffering from the inflation, and also some countries in Europe, basically, they are already in a very bad, commercial and also situation and economical situation. So all of this, I think it affects the demand to grow, actually, and also OPEC to change their opinion to allow more export from their productions. Although that some countries like Saudi Arabia and others, and Iraq in particular, they are maybe suffering out of these cuts. Maybe they have seen the peak of a continuation on these cuts. But nevertheless, I mean, if you come to the bottom line, it is better economically for you to reduce the volumes and get a better price, rather than increasing the volumes and then the price to collapse to 60 and below that. So you have to balance, but I think it's a wise decision, and I think maybe June it will be the date that we will see either we will continue or they will decide to say that enough is enough. We can't just force we can't just fight the market alone. Somebody else has to come in. But again, we are now seeing more better compliance from countries like like Iraq, like Russia, and other countries. Policing now from OPEC is more stronger than what it used to be. So that's a good news. So let's hope that we will continue having this good price of above $1 above 80 or 2 for the coming at least 4 to 5 months.
Okay, thank you very much, Ali. Yasar, let me go to you on that. In terms of policing and quotas, compliance with an OPEC, the other thing that's going to happen in June at the meeting is not only continuous decision-making on how much the group as a whole should be producing, exporting, but also the whole quotas and realignment of that. I mean, how is compliance going? Would you agree with Ali that we are seeing countries like Iraq and Russia complying? I know that the problem cases were more the West African producers, for example, but, is compliance strong, and how is that going to affect, do you think, the functioning of the group as we move through the year?
I mean, compliance is at the center of everything at the moment, for OPEC, especially after the decision to extend the cuts to the second half of the year. Now, we have some countries overall, and, we were putting the projection figures for February last week, and I think OPEC's MOMER is coming out today. You can see strong compliance from almost all countries, especially the countries in the Gulf. Saudi Arabia is leading by example there. Even the UAE is coming, to bring its production close to its required level. Kuwait did a great job in transitioning, into its required level in such a short time. The problem with the African countries, I think, was more about, how unrealistic their baselines were. And this is why, we have also unrealistic quotas for them. But I think that was largely amended in November, when we had the new required production levels added or amended. So I think the most important two things right now are, one, compliance. What is OPEC going to do? How is the policing going to be done? For the rest of the first half of the year. I mean, I look at Iraq and Kazakhstan, and you can certainly see some overproduction there. Iraq is, our MEES estimate for February was they were over by 360,000 barrels per day. Although the caveat here is that, some good 240,000 barrels per day comes from Iraqi Kurdistan, where the government has basically no control or power over, reducing production. Although they have added also 2 new CDUs in the country. I think in terms of Russia, it gives more clarity, that we now know the makeup of the contribution that Russia is pledging into the cuts. We know how much is exports and how much is crude production. But I think eventually the June meeting is going to be important for a couple of things. One, this is when I think OPEC is going to set what it is going to do for the second half of the year. And what is going to be done in terms of production levels for 2025, and potentially also looking into 2026, because market share then is going to be quite important. So implementing the new mechanism that is based on actual capacities, and also I think larger considerations within the group on market share will also be important. Sorry, can you hear me?
Yeah, I can hear you very clearly.
Thank you.
I'm assuming everybody else can. No, very loud and clear. Thanks, Yasar. Yes, we can all hear you. Daniel, good morning again. Let's talk a bit about what's sort of influencing sentiment. We had last year, and we still do, obviously, very front and center on people's minds is the interest rate rises and where the central bank policy is going with that, of course, and how that's impacting economic activity and demand for oil ultimately. We had somebody on the show yesterday who was indicating that we're beginning to sort of see people settle into this expectations of interest rates, and now that we are focusing more on fundamentals in terms of physical flows of oil. How much influence is monetary policy still having on in oil demand, do you think, and economic activity? Or are we kind of in a new normal where economies can feel a bit more stable?
Well, I'm not sure that we're quite there yet. Interest rates are always going to be hugely important for the world economy, and especially in current circumstances where they're at the kind of restrictive levels that we've not seen for years and years, as many people just haven't really operated in this environment. There was that remarkable resilience from some economies, at least not all. The US in particular grew very strongly last year, much better in a recession that had been anticipated. But there's some idiosyncratic factors potentially feeding into that post-pandemic savings, for instance, or savings left over from the COVID-19 crisis. Those are starting to evaporate, and we're starting to see greater weakness now. Now, I don't think that in terms of the US, at least, the kind of data we've had coming out of that yet is anything that will prompt the Federal Reserve to start cutting rates more sharply than we anticipated. We've held to a view that rate cuts won't start until June for some time. The market's much more in line with our view now. And when you look at the NFP print that came out on Friday, for instance, there's nothing there that's screaming out for stimulus, but at the same time, it's still quite restrictive. So are we going to get that soft landing, the Goldilocks landing? It looks like possibly, but at the same time, that doesn't mean that suddenly there's going to be a great burst of demand, a great burst of activity, but rates are going to come off quickly. Growth this year will be slower, and we expect that will mean slower growth in oil demand as well.
Well, I mean, certainly, if you look at what gold and Bitcoin and some stocks are telling us, is that this inflation is here to stay, isn't it? I mean, it's in fact, if anything, it's being pushed a bit in the start of this year up, and that concern may sort of raise its head once again, having sort of slightly decreased last year. Would you agree that sort of we've got these opposing forces at the moment, and that perhaps we won't see a rate cut at all?
Well, I think the base case is still that they'll come, but maybe we'll just see one or two. I think, we were due the US CPI print today, 3.1%, like it was last month. That's still much higher than the target level. And it was always going to be this last mile was going to be the hardest in bringing that down. And that's always the case. And maybe we're just settling into a new normal where they have to readjust their target rate. The neutral rate might be a bit higher now after this disruption we've had over the past several years than it was previously. Core inflation, is ticking down, but even there, it's expected to stay at 3.7%, so it's still pretty high levels. So, will the Fed cut? Will central banks cut? We still think they will. Will it be rapid? Will there be a sudden move to cut rates sharply? No. They took the escalator up. They'll take the stairs down, essentially.
Okay, thanks, Daniel. Ali, back to you. Let's talk a bit about geopolitics, but not get too deep into it. But again, on the shipping side of things, I mean, actually, there's a headline today on our news bulletin that says Russia, Iran, and China are holding warship drills in the Gulf of Oman. I don't really want to get into that, but from a shipping point of view and the disruptions we've seen in the Gulf of Aden and Red Sea, etc., do you sense, as an OPEC member and as a Gulf country, a sense of nervousness by the region on this, or again, do you subscribe to the view that everyone's saying until we see real physical disruption, everything's steady as she goes?
No, I think the situation in the Red Sea is a threat to all other countries, to all region countries over here, and nobody wants to see any kind of disruption from the Red Sea, and it's a main line of many ships, and including oil going to different places, coming and going. So I think any disruption over there would be a big thing. But thank God, but so far we haven't seen any kind of a problem or an issue in supplying side of oil and energy in particular. So unless there is a dramatic changes in that particular area, then yes, we could be more in a situation where we cannot really export our crude, or there is a problem on facing the Bab el Mandab and so on and so on. But at the moment, I think it is all very well managed, at least this kind of situation, by everybody, including the Houthi themselves, because from the beginning they've said that we are not going to target anything goes, to anywhere else except the Israel or occupied Palestine. So I think they are maintaining their words so far, and we hope that the situation will be calm in the coming few months with countries like Oman and others, and Saudi Arabia, and also Qatar and other region countries. They are talking or try to manage the Houthis' expectations and try to cool the air in the region. So let's hope that these initiatives will see some influence to the region and also to the Red Sea in particular. But again, I mean, nobody knows what will happen in the coming few days, coming few months. We hope that the ceasefire in Gaza will take place during the holy month of Ramadan. But so far we haven't seen any kind of an agreement coming up soon. So we don't know what is going to happen. And as long as this crisis continue, then Houthis, they've mentioned clearly that they will continue. So I don't know. I mean, we are not happy with what happens in everywhere in the region, basically.
Thanks,
like
Hani.
anybody else, I think.
Of course, of course. Yasar, I just want to talk to you a bit about, they have another headline on our news bulletin: Saudi Aramco reduces heavy crude supply to Asia. I mean, Saudi has been adjusting its OSPs to Asia, accordingly, with other supply that may be competing, obviously, with that. A suggestion towards the end of last year that they were getting a bit more nervous about non-OPEC supply, etc. What do you think is the sentiment within Aramco this year in terms of how competitive its crude continues to be in Asia? Would they feel secure? Is there any reason that this non-OPEC supply throughout, as we get through the year, could become more of a concern? You're on mute, Yasar. Sorry.
Yeah, so I think just looking generally at what Aramco did with the OSP, so they hiked the OSPs for April. And I think part of this has to do with the fact that, we are seeing some slightly improving premiums for medium and sour grades like Oman and Upper Zakum, and heading to Asia in February. We saw some of that. So that is kind of a encouraging signal to, increase the prices. But more importantly, it's more about the fundamental shifts that we have, or the supply shifts, really, because you have more of the Russian Urals taking longer time to cross through Bab el-Mandeb, or, to go through the longest Southern African tip, voyage to Asia. So I think, part of that is the reasoning for hiking the prices. I think when it comes to Saudi Arabia and the placing crude in Asia, you can see some signs of improvements because of, longer voyage for Russian crude into and even non-OPEC crude that comes from that has to cross it through the Suez. So the longer time it takes, the more customers in India and China and elsewhere in Asia, they kind of tap back into their traditional sources of crude oil, which are more reliable. And Saudi Arabia is quite a reliable supplier, so are the Gulf producers. And this is why I think the Saudis and other Gulf producers are using this window, because as Mr. Ali said, as Ustad Ali said, there might be a ceasefire coming, hopefully, inshallah, and with that, we might see a reining in of Houthi attacks on shipping, and that means we go back to the oversupply that moves it freely to the other side. So I think it has to do with that. It also has to do with refinery economics. Many refineries are coming out of the maintenance period, and we are seeing a rebound. So, but by the end of the day, remember the Saudis, the most important, or a very interesting portion of how they price their OSPs is what is the net price at the end on the refining side, so that also, they are also sensitive to that. So that also gets into consideration.
And what about, just staying with you, Yasar, on Chinese refining? You're talking about Middle East refineries, and of course they all have maintenance. You've got the Chinese petchem facilities continuing to strongly demand oil. Any sense of what their strategy should be with these prices in terms of re-export of products, etc., and how that's influencing those spreads into the region?
Yeah, I mean, when you look at, so if you're looking at imports, in China, especially crude imports, well, I mean, January, February is quite an interesting period usually because this is where you have the Chinese New Year and people move around the country, they take flights. So we had some good figures, I think it was a 5% year-on-year increase, in January, February, but it was at the same time a 5% decrease to December levels. So, and that gives you kind of a mixed picture for demand in China itself, because it's, the December, relative to December, the decline shows, signals a weaker imports outlook, this year, despite, small teapot refiners got new fresh quotas and so on. I mean, even CNPC itself, I was reading around, it expects, 1.8% year-on-year growth in refinery throughputs in China, and, to around 15 million barrels per day. So, the import scene, the import picture in China, and, refining utilization is going to be important, as a indicator for overall industrial activity in China, demand outlook. But to be more specific to your question, what the projects, where are they going? Are they going to Europe? I think we have a time delay factor, because of the voyage through the Cape of Good Hope. So that is also important, when it comes to projects coming from Asia and the Gulf to Europe. So China is a big factor in this. But let's not forget that, with the longer voyage, you will need spot cargoes. And I think the US diesel complex is a great provider to Europe. And I think many refineries in the US are also coming out of maintenance, and we might see more volumes coming up.
Okay, thanks, Yasar. There's our survey question for today, which is about sort of how tight are the balances in the oil market by the end of Q2. One or two people saying that we're already kind of in a tight, well-managed tightness at the moment. And so by the time we get into Q2 summer demand, etc., that OPEC Plus will release some capacity. We'll have to, we'll need to, we'll have the advantage to agree or disagree. Will we see that tightness? Daniel, let's go back to you. I mean, I'm sensing a little, there's been these headlines on China economy, which obviously it has a lot of things to sort out domestically in its economy. But we have a headline saying China's exports surging, get ready for the global backlash here in our news bulletin. And that by all intents and purposes, the Chinese economy continues to grow, right? So could we see a more positive picture, do you think, this year than what happened last year? They've set their 5% target. But, could we be surprised to the upside there in terms of also oil demand, obviously?
Yeah, so 5%, for China, perhaps it's not on the face of it all that ambitious a target, given the kind of growth we're used to. And obviously, as the world's second largest economy, any strong growth from China is key to global markets, all sorts of commodity markets, not least oil, of course. So 5% this year, not in the face of it very ambitious, but given that 5% was achieved last year, with those reopening gains still being won, 5% would be pretty good result, a pretty good outcome this year, I think. And it will come down to, will they release that kind of bazooka stimulus that they haven't really done so far? There has been stimulus. There have been various policy changes made, but it's been kind of tinkering around the edges somewhat. It hasn't really released the kind of growth that perhaps people were expecting. Now, whether they're going to do this at the minute, I think probably not. They think they would be happy with 5%. I think maybe priorities have changed somewhat from where we were in 2008. certainly we're not going to see a kind of repetition of that when China's stimulus saved the world. The world is a different place now, and there are different policies in place. But nevertheless, in terms of demand, you just have to look at the kind of international travel numbers. Domestic travel has picked up very strongly, but international travel is still pretty weak. And just speaking from a Dubai perspective, it's the Chinese visitors are down hugely still on pre-pandemic. Singapore as well. I think Chinese visitors to Singapore were up 60% month on month in February, but even with that growth, they're still way below where they were. So there are still gains to be had there in terms of the international travel market, and maybe we'll see greater stimulus than we have so far, which could boost domestic activity as well.
And I mean, what about other Asian economies? Putting India aside, South Asian economies, with these current energy prices, gas prices are quite competitive and manageable. I mean, you have different gas prices globally, obviously, but still, how are they faring with the sort of stability of the $80 oil price that we've kind of seen for the last 2-3 months? And is that a good trajectory for their economies if things remain the same?
Yeah, so you mentioned India. India is expected to be the bright spot in terms of the world's major economies this year, as it's arguably been the last couple of years as well. For inflation, they're actually due the CPI print today, expected to come in at 5%, so pretty much in line, 5% year on year. That is pretty much in line with the RBI's targets. So seemingly they are coping so far. Growth has been pretty robust, is expected to remain so. The determining factor for India is always the food prices as well. Are we going to see another shock to tomatoes or onions, for instance? But as it stands, I think the inflation level in India is coming down, and the economic outlook there is really pretty strong.
Thanks, Daniel. Ali, what about inflation in the Gulf and Oman in particular, where you're based? But generally speaking, is that a concern? Obviously we're tracking here the dollar in terms of currencies. And the Gulf is booming, and we have inflation. Any concerns there in terms of cost of living, etc.?
Well, I think if we take Dubai as an example, I think you can see that the inflation is there and cost of living went high, but nevertheless, the Dubai economy is booming. So it's a different situation if you compare here with Europe or America or Asia. I think here it's more stabilized, and also the inflation could be more controlled by the government rather than left to be controlled by the consumers and others. It is better controlled here. Nevertheless, I mean, we see the difference. We see that especially now in Ramadan, people tend to go to supermarkets and buy a lot of things to prepare for Ramadan, and we can see that the differences is quite high in terms of price of normal things that we used to buy on a daily basis. So inflation is there, but we don't too much feel it because maybe the incomes is good. They have increased some salaries, and the packages, salary packages, they have changed recently. So I think it is more better control in different ways and means from the government side, rather than keep it floating in the air without having any kind of control. But let's wait and see. This is how long it will take until we start feel the pain again I don't know, in the very near future maybe.
When
the inflation is getting more and more in the region, basically.
Diala, can I add a couple of things on this?
Of course, yes.
Thank you. So I think there are two, as Ustad Ali, I think he has summed it quite well. But I think there are two factors to add in as well. One is the ripple effect of commodity prices, so that gets transferred to many regions in the world. It is quite obvious. I think with subsidies in the Gulf, it differs from one country to the other. So when you go to Kuwait, for instance, you have quite a lot of subsidies for energy, and energy is a big portion of inflation usually. The inflation energy prices. So that is quite subsidized in places like Kuwait, Qatar, Bahrain and others, to some extent Oman. But these subsidies are lower in places like Saudi Arabia, where it is managed on periodic basis. And, to some extent, these are less in places like the UAE, where it is more liberalized with energy prices. So I think the impact is asynchronized in a way, on all countries. But, as Mr. Ali said, there is a base in terms of subsidies and protections and support from the governments, but it differs from one government to the other in terms of
and I suppose,
impact.
and those
I
can
agree
be
with
tweaked.
that. Yeah.
I do want to go to Daniel for a very quick final comment, although we started a bit late, so I'll allow that. We've got 67% saying disagree. We will not have a tight enough market by the end of Q2 for OPEC Plus to start releasing some capacity. Daniel, just to go back to you on the inflation story, I mean, we had one or two people on the show this week saying that, again, the timeline's uncertain, but the only way is up for commodities and oil to hit new all-time highs. One of our commentators, Amar Najia, is very confident it might not happen this year or next, but that's the only way things can go, in his opinion, because inflation is here to stay. Do you agree with that, considering that there's a hesitancy to increase interest rates much more than where they are at the moment in general?
I mean, over a longer term, I think inflation is going to be more stubborn at kind of these levels. I don't think it's going to be easy to get it down to a 2% mark. And I think commodities will play a key role in this, not least oil. And our view is that H2 prices will be higher than they were in H1, and that will potentially complicate central banks' decision making through the end of this year. The Fed wants to bring it down to an average of 2% average over time. When it made that announcment, it was more about getting it higher than getting it lower. But since then, circumstances have changed. Will they be sticking to that? I think they might have to reassess when they review their policy. I think maybe they will have to target a level that's a little bit higher than that going forward.
Yeah, and of course we'll be inching even closer to the US election at that point. So all eyes will be on that policy even more than they are now. Thanks so much to Daniel and to Yasar and Ali this morning for joining us, and have a great remainder of the week. Thanks, everyone.
Thank you.
Bye-bye.
Have a good one. Bye. Bye.
Bye.